Boom. We are alive, ladies and gentlemen. We have another great podcast guest for you today in the search of what's going on in the world of blockchain. We have Kemani from Spectre. Now, Kay, we had you on a few years ago because you were working and building something around the binary options and future sides of the crypto world. Can you tell us a little bit about yourself and what's been happening over the last 3 years with you?
Thanks, Tio. Good to be back. Hello, everybody, and thanks for having me once again. I know it's been 3 years. In crypto terms, that's like almost 30 years. And it's interesting that now we're in another potential bull market. And last time we had met, that was a bull market as well, right? And it seems to there's quite a few bear markets in the middle. So yeah, what we were basically doing in 2017, if you remember, was there was a huge problem in that industry, in the binary options industry, where the brokers would seize the traders' funds. And if the trader won, they just wouldn't pay out the rewards. And so what we wanted to do was to create a smart contract-based trading platform, which after KYC would allow traders to actually trade directly with a market maker without the broker intervening, right? And smart contract technology would be involved in making that possible. And so we created the wallet account, which is purely decentralized trading. The bear market hit, so we had to add a centralized account as well to adapt to market conditions, so that we could grow. Now the good news is that we have grown dramatically over the last 3 years, but we still have so much more market share to capture. In terms of my background, for those of your readers or subs that are new. So I worked in high finance. I worked in equity research at JP Morgan, and then I was at Goldman for a few years as well. And then I left in 2011, towards the end of 2011, and I started my own sort of entrepreneurship journey. First, I was running a ratings company that didn't work out well at all, but we pivoted just in time and created some interesting financial technologies and education, and that kind of brought us into the financial space. And then in 2015, 2016, we started to explore smart contracts and what we could do in the space.
So for those people that don't know, because I mean, even me, some of this stuff is vague, like how futures contracts work. Even it's quite a complex thing. So tell us a little bit about how the specifics of kind of what binary and options represent in the financial sector and how
Yeah.
people use them.
Yeah, absolutely. So I won't get into the Greeks, the delta, the theta, and all of that time value stuff. That's completely irrelevant.
Oh, that's the come on this disturbingly complex mathematics of volatility is exciting.
Exactly. Exactly. Yeah. So the thing is that the simplest way to trade the financial markets used to be binary options. You just press up or down, and you're taking a bet on the underlying asset. Right? It could be FX, it could be equities, whatever you're betting on. The problem there, of course, is that the broker would seize your funds if you were actually winning. It's difficult to win in the markets. You running your trading group, you'd know that it's not easy, right? Even with Robinhood there these days, you get that extra push, especially with IPOs. But generally speaking, it's a tough market to navigate over time. So what we did is we created a digital contract. The digital contract is much more customizable. It's a much more advanced form of a binary option, but it's still very simple. What I mean is, as a trader, if you're going long Tesla right now, you're basically buying the equity, or you're taking a trade out on the CFD, and you're holding Tesla with the view that it'll hopefully get to $1,000 per share, right? Or it'll do a 20% or 30%. But it's not going to do that in a day. It's not going to do that in a week or something, generally speaking, although Tesla does go a bit crazy sometimes, but you're not going to get that level of return so quickly. That's where digital contracts come in. You can actually structure a contract. You, TO, can structure a contract and say, okay, over the next 10 minutes or 60 minutes, I believe the Tesla shares are going to fall because I believe that this news is going to happen, or for another reason. And I would like to stake or put as collateral $100 on this, or $1,000 or $5,000. And over the next 60 minutes, if you are right, if you're proven right, you can close your trade early and earn 70, 80, 90%, or up to 400%, depending on what the algorithm is spewing out at that point. Or you can actually wait till expiry, right? It's totally up to you. Another thing that you can configure in a digital contract is how much you want to risk if you lose. Now with binary options, if you would lose, historically, you would lose 100% of your trade. That was the biggest problem. And if you'd win like 70, 80%. Now with our onboard risk management, you can actually only lose 25% of the trade or 50%. There's literally an adjustment dial. And that's a really popular option on our platform. Now, I mentioned Tesla. We're going to be adding the entire gamut of US equities very soon. So we'll become the first broker in the world to offer digital contracts on US equities. We already offer reverse futures. Reverse futures, basically, I know you're going to say, what the hell's a reverse future? I know futures. Reverse futures, basically you being able to trade Tesla, Apple, and a range of stocks, but in the past. So imagine going long Tesla before Tesla became Tesla. That our system allows that. And right now, 90% of our volumes is actually reverse futures and epics, which is basically trading euro versus US dollar, euro versus GBP, and all these pairs, but historically, right? So we've created those markets, and it's
Doesn't make any sense. It
exotics.
doesn't make that second part doesn't make any sense to me, Kay. You're going to have to try to explain that.
Absolutely. No, we'll definitely we'll 100% get back to that. So that's a popular part of our platform. The more vanilla bit is traders say, okay, you know what? Exotics are not for me. I just want to trade live prices. I want to trade Bitcoin versus US dollar. I want to trade currencies. So we offer that as well, right?
Okay, so I just want to clarify here too. So,
Mhm.
a binary option is basically the option to buy at or sell at a future price within a time frame limit. So it's basically
Correct.
either a yes or no answer based off time. So it's kind of almost like velocity or volatility through time because of that yes or the yes or no. And you can have more complex versions of these options as far as I know. But binary options just means it's either a yes or a no type answer. It either
Correct.
went up or it went down, not by how much. Is that correct?
That's totally correct. Now, our version, of course, is more advanced. So it does actually matter how much it's gone up by. So, for example,
Does that
because
have
if you,
a different name than or is it still considered a binary option? Or
it,
is it
we,
just an
well,
option at that point?
it's an option. It's what we call it because it's digital. You're not actually getting the underlying. So we call it a digital contract.
So can you? I know that we're just kind of. I want to go down this rabbit hole just because
Sure.
exotics is such a complex conversation. I think this is a good spot to kind of go over it.
Sure.
How would you explain the difference between, say, a futures contract and an options contract then? Because they're both similar to, yeah, there, let's leave it as that as a question.
Well, a futures contract, you're basically trading on the futures curve, depending on where you're actually buying it on the expiry. Um, the difference, of course, with a futures contract is A, does it roll over? B, does it deliver the underlying? But more importantly is if you're, let's say, you're trading oil futures, for example, there is no specific expiry, so to put it, where you're entitled to get the underlying. Whereas if you're having a call option on oil, or if you're taking a call option on gold or an underlying stock or whatever, you are entitled to actually receive the asset if it actually expired in the money, right, at a particular price,
Okay.
to the detriment of the option writers. But again, so a binary option is you don't actually own the asset at all. You're actually just taking a bet on the direction, and at a particular point in the future, if the price is above your entry price, you get paid, right? An X amount, that's it. With a digital contract, all we're saying is that still exists, that relationship. So if you are right 60 minutes from now that the price of oil will fall below your entry and you entered at X price, you'd get paid 80, 90%. But what if the price of oil doesn't actually, what if the price of oil, for example, drops by a dramatic amount? You should get paid more, correct? So that's what our contracts allow you to structure in theory. And you also can, if you don't want to hold your trade to expiry because you're worried about holding period risk or news flows come in, you can actually close your trade earlier, but you'll get a lower payout.
So again, what's really interesting here, and I don't know how many people. It's a great conversation because a lot of people, even myself, this is not like the idea of options, for instance, is a fairly complex idea because as we said, we're using mathematics about volatility and time to represent a price. So now, I just want to make sure I'm understanding this by kind of reiterating. So what you're saying now is you've created the ability to have a more advanced option than the general financial sector has because of the way the contracts worked, where you have a binary option that's like flexible that you can edit within your your buy and sell screen.
Correct. What? Just a slight correction there. You're totally right. We've created a more advanced version of a binary option, but it's not as advanced as, let's say, a put and call option, right? And especially for volatility traders that are trading the delta, or they're hedging the delta when they're buying calls or they're selling puts, that stuff we don't even get into. So ours is a hybrid between that level of complexity and the binary option, which just was a bit of a joke of an asset, right? No serious trader would actually trade binary options. So we've created something which allows traders to mimic the actual how real options work, but without the complexity of needing to understand time value and all of these things.
Yeah, that's it's for it's generally it's interesting. It's a product for a higher level of general market participant, effectively too, right? I mean, the average person is just starting to learn about buy and sell, let alone price through time and velocity and volatility.
Oh, absolutely,
It's such a
absolutely. Yeah.
for anyone that's ever, and I hope the Bear family has read Nassim Taleb, but Nassim Taleb is classically an options trader, and there's a very intimate understanding about the ability to use options to your advantage when you're managing a portfolio, because he would ultimately, on the long term, take a bunch of small cuts. So he would be constantly buying these out of the money, generally puts. I think you generally go to the market to the downside, that downside volatility. So it would cost maybe $1,000 a month to enter, but when you get those big down sweeps, and they happen so quickly, he would make such an enormous amount of money from such a small amount of money on the table because of that volatility through time mathematical concept that we're talking about here. So I just want to reiterate it a few times, Kay. I'm sorry for kind of like bouncing around in this particular area, but it's such
No,
a
of course.
complex area. I wanted to reiterate, even for my own personal understanding,
Yeah.
because these are very valuable, like tools to have in your toolkit if you're managing a portfolio, right? So one of the things that happened when we were having our chat in 2017, you didn't have the ability to really use futures contracts and to use options to manage your portfolio back in 2017. So the downside risk, all you could have done was really just sell Bitcoin effectively, right? Whereas now these derivatives and these kind of exotics make it maybe even easier to manage like Bitcoin's volatility and risk, because you can take these out of the money potential options. So what you're saying, and I so again took over this, what you're saying is there's actually this is a very valuable skill and toolkit to have, but again, most of the people that have it are quite advanced traders or like hedge funds that are using this type of stuff.
Right.
Is that correct?
Right.
So do you see
That's totally correct.
yeah,
Yeah.
are you finding that in the adoption of the product as well, that most of the people that are showing up are like more advanced funds?
No, interestingly, no. So that's a good point you make. So literally 99% of our audience is retail. And the reason is the simplicity. Once you actually sign up and you open an account, you have a demo money account, right? So you can actually play around with the digital contracts and see how they work. And typically that process takes a week. People like to get into it. They like to test the waters to see if they know if they can actually generate a return in the demo account. And that's when they deposit and play. To give you a bit of a benchmark, the trade sizes, the average trade sizes in our system are a few $100s. And then you have some whales that are taking a few $1,000 size trades, but we don't have any institutional investors on our platform. You'll be surprised, it's a very simple product once you actually get inside. We have removed all the complexity that normally comes with trading options.
Part of what I want to know now is how it runs and functions in the background. What type of how does the liquidity and the trading for these ideas all kind of come together to create the front end experience?
Yeah, sure. So basically, we have what is known as an autonomous market maker, the DALP. If you recall, this was a decentralized autonomous liquidity pool. This was the first kind of quote unquote Uniswap concept that was, we came up with that, and obviously Uniswap has done an amazing job. So what the liquidity pool does is our algorithm will match you, let's say, going short on a particular asset with another trader going long on that same asset with a similar expiry, if it can. If it cannot, this liquidity pool or market maker, which is a few $1 million in size, steps in and ensures that liquidity is there. So it will take the opposite side of your trade. And the moment you win or lose, or if you cut your position, which was out of the money or in the money, you'll get paid in your account. That trade is registered on a database and then ultimately moves to a blockchain. And you can do this in two ways. So if you're a trader who doesn't trust brokers at all, then you can basically trade directly against this autonomous market maker, which is known as the DALP, and you're trading from your wallet, right? So it's your decentralized wallet. It's not going through us. We find that's a less popular option, just because of the gas costs and things like that are a reality for Ethereum-based trading. The more popular option is the centralized option, but that does require you to deposit capital with us. So when you do that, then you're basically getting reconciled real time. And that's kind of how it all plays out. There's a simple trading screen. If you go to Spectre.ai, you create an account, you'll have demo money, and you just select your assets and you just go ahead and place your long short trades, and you can watch the price develop in your favor or against you, and then you can obviously close position. So it's a very simplified platform. The more users the platform gets, so to give you some idea of where we are, we reach around 50,000 traders at the moment. In terms of monthly active traders, it's 1,000 to 2,000 or so, and generally speaking, I would say around 95% of the time or 90% of the time, the autonomous market maker, the DALP, the pool will step in algorithmically and take the other side of your trade. In some instances, 10% of the instances or so, 5 to 10, you will be matched against another trader, right? So there the swap just happens immediately in the back end. In total, we have generate something like 22 million, 23 million in volumes, billable volumes, not just ghost volumes, billable volumes. And I think we've paid out now almost over 5 million in wins to traders. And so the platform adoption is growing over time. What we recently did is on Spectre, you can obviously deposit in Ethereum and Bitcoin and a range of fiat currencies, because we have built up a pretty large network of payment service providers like Skrill and Praxis, what have you. Recently, we've added something known as a DeFi wallet, which might be interesting to crypto traders, specifically the DeFi Boost wallet we call it. And the reason we call it a Boost wallet is it allows you to actually deposit your favorite DeFi coins like Synthetics, or USDC, which is obviously a stable coin, or PAX and those type of coins, and you can actually put them as collateral. So let me give you a scenario. Let's say I believe that the euro US dollar is going to rise in the next 20 seconds, or let's say 50 seconds, and I'd like to wager $500 worth of my lend tokens. And if I'm right, in the next 50 seconds, if the price goes up, I can shut my position, and suddenly I will have generated a 90% return on that, or 85% return. So now suddenly I have $300 to $400 more of lend in my wallet, and I can deposit that. I can withdraw that immediately to my ERC address, right? So now I've suddenly grown my lend balance, or my synthetics balance, or whatever, by 80%, 80 to 90%, right? And so you can choose what coins you want to get paid your winnings out in.
So I've got two questions about that. The first one is there a risk to the liquidity pool if someone so for me, I look at it from, I try to look at it from the complexity of, okay, well, what if I want to manage the risk to the downside? Like for futures, for instance, right? Ethereum the other day, we were up at $604. There was a pretty obvious distribution pattern coming in. I'm thinking to myself, the easiest way to hedge to the downside would be to take a limited portion of what I have in the portfolio and at a very opportune time, basically go short at like 40 50x, so I can cover the entire position. So if I'm
Right.
wrong, I lose like $1,000. If I'm right, I covered the entire position for the downside for the duration of the next few days. Is there, so in the event that someone comes in with a larger sum of money, does the liquidity pool ever become at risk for like someone's payout being extraordinarily big from one of those opportune moments where they catch the market dropping abstractly, etc., something like this?
It's a fantastic question. So the answer is no, because we have basically, I think now it's two and a half, or two and a half, about 2.8 years of data that the pool, that the liquidity pool's algorithm is continuously harnessing on a daily basis, and it keeps adapting the payouts that it pays and also the trade sizes that it accepts. So this is an autonomous process. And in answer to your question, you can't trade, you can't place certain trade sizes at particular times in the market if it would make the liquidity pool at systemic risk. So what I mean by systemic risk is the liquidity pool is a few $1,000,000 in size, right? So the average retail trader won't be taking trades on our platform that are 50, 100, 200K. The liquidity pool just would reject those. But they can take trades that are a few $1,000s big. And as a percentage of total assets under management, that's not a problem. So generally speaking, the pool, given market conditions on any particular time of day, will say, okay, today, the 5% of the pool, the value at risk is basically 5% in terms of how much drawdown it is able to withstand, right? Now, here's the beauty is if it matches you with another trader, however, that can be a whale. And in that respect, the pool takes no risk. It's just you being matched with me, right? And the pool takes a cut. So in short, in summary, TLDR is no. So before you even enter a particular trade that could create a problem, even for you as a trader, the pool reject it. I'll give you an example. We had a situation with a trader last year from the Indian subcontinent that had lost a lot of money on the platform. And then obviously a lot of the money went to the liquidity pool, and so he was obviously suffering what is known as an amygdala hijack. You know, the little portion in your brain, which the amygdala, which takes over your neural cortex, and you can't think anymore rationally. You go into your reptile brain and you start to chase your losses. It's every trader's nightmare. This person was having some sort of an elongated amygdala hijack, and he just kept on depositing more money to the platform. And our system actually flagged it to us and said, this guy is at severe risk, because ultimately you can blow your entire finances if you're not careful, right? So the system literally at this point, it said, okay, this person has lost, I think it was something like 50,000 US dollars or something, which is enormous for someone in that region. And this literally, we actually put a block on him. And he had written to us a few times saying that, look, I suffer from addiction. And can you guys help? We said, yeah, obviously. So it's, we're done. So this, in answer to your question, it works both ways. Obviously, the liquidity pool is only creating markets where it can pay out to winning traders. On the other hand, we generally we don't accept large whales on the platform.
Is there a way to create an interoperability between one liquidity pool and another, so you could like hijack Uniswap's liquidity through contracts or something?
The thing is that, look, the panacea of digital contracts is a Uniswap with digital contracts. In Uniswap right now, you're swapping tokens. What you have just said is brilliant. And I do believe this will evolve someday, whether Spectre are the people to do this or whether Arcane Bear does this someday. But to create a Uniswap which actually offers synthetics, right? A Uniswap for epics, for reverse futures, for digital contracts. So you're not actually owning tokens, but you're creating liquidity. You're creating a structure, an infrastructure that Uniswap has, where liquidity providers come in, as opposed to us, where we just have one giant liquidity provider and a few traders that are algorithm matches. The ideal scenario would be where you have hundreds to thousands of liquidity providers and you pay them a cut and they take the opposite side of the trade. But the asset being traded is not actually tokens or shares, it's actually synthetics, which is what we're offering. And by the way, just to be clear, when I say synthetics, I'm not talking about the synthetics, the DeFi company. I'm talking about synthetic products. So digital contracts, for example, where you don't actually own the underlying. So yeah, you absolutely hit the nail on the head. That's a really interesting idea. It's not something that we right now, given our roadmap, we could do, given how busy we're with what we're delivering. But someone who were to implement that, that would be enormous for the industry. Because think about also the transaction times. There is no gas, right? This would just be instant, or the gas cost would be fractional. There's no real transfer of ownership. It's just it's vapor almost, right? Which is what a CFD is. A contract for difference is vapor. Brokers offer the product. They don't actually own the underlying. So I think it would be very interesting.
Yeah, it's just one of those ideas about decentralization that comes to mind, because there's that conversation around Sushi Swap and the launch pads and who's providing liquidity and are you being rewarded, and the automated market makers are such a fascinating conversation because what the potential is for the peer-to-peer marketplace to grow itself. We have a Arcane Bear rewards token that we give to our users, and they can buy
right.
memberships. So it's a ERC20 token, and just in general, the fact that there is a marketplace because of these automated market makers, I think is an interesting idea to digest. So I was curious to see if you should be able to build rails between them, right, and not stop it.
You're totally right. Yeah.
So tell us a little bit about what the last parts or the next parts of 2021 are hoping to look like for the roadmap, and where a lot of your strengths are, and then the weaknesses of kind of what troubles you guys are having.
Yeah. So in terms of the next roadmap items, we have for the next, I would say, 2-3 weeks or so, we are going to be putting out your traditional CFDs. It's a new digital contract class where you just have open-ended trades, right? So you can take a 6-month trade or a 2-year trade on any particular asset, and you just leave it open, good to close. You can set your take profit, your trailings, all that. It's a more conventional, boring product. That'll be out, and then I think the more exciting bit, my personal excitement, is in the next sort of 3 months or so. We've already received approval from, I believe it was NASDAQ or NYSE. We need dual approval for this, but once we get those both in place, we will be rolling out a range of equities, very exciting equities, so that people can trade digital contracts on all these exciting equities in the US market and also in the European and Asian market. So I think that's very exciting. And just to make a distinction, it's not like Robinhood, because again, with Robinhood, you're buying the underlying asset. So you have to hold it for a long time before it generates your 70, 80, 100%. So now they can actually make 80% on Tesla in 5 seconds, in theory, right? Or even 2 seconds, our shortest expiry. So that's very exciting. And then, of course, we are adding in the DeFi wallet, if things go well in the next 4 months or so, the ability to, from Uniswap, add your token into Spectre, just add it literally, and the autonomous market maker will create a market for you, and you can actually trade digital contracts on your favorite tokens. So for example, if you are trading Yearn, right, Yearn Finance, for example, or Yelt, or whatever it is, our DALP, our liquidity pool, will create a market for that. So you can actually say, okay, in the next 10 seconds, I think Yearn is going to drop. I'd like to earn 90%. Okay, the liquidity pool will create that market for you. So you don't have to go to Uniswap to actually take a short or go long. I don't think you can even short on Uniswap. I'm not sure, but correct me if I'm wrong. But you can actually do that on Spectre.
No shorting yet. Yeah, they haven't. Some of those features are being built. Like the company Synthetics is allowing some of this stuff to happen in the background. Right. That's kind of what DHedge has been using for custodial ownership and trading of things in the. Yeah, it's such an interesting conversation. So, what's the have you heard of FTX? So Sam Bankman-Fried. What's the difference between how they're offering Tesla? Do you think is it a similar contract for difference?
Could you tell me the FTX one? I know the the company, but could you tell me a bit more about that? And
Um,
I can tell you if it's
I would have to, yeah, I would have to double check. Sorry. I saw that they
okay.
were offering digital versions of Tesla and some of the other bigger companies like
It probably
Netflix.
probably it's a CFD on Tesla. Again, I'd need to double check because I haven't heard about
Okay.
it, but
Yeah,
probably a
sorry.
CFD. For us, it's a digital contract. So it's literally, you can say within the next 2 minutes, will Tesla rise? If you're right, you get this much percent, or if you're right only by a bit, this is how much you get paid. So it's a quicker way for traders to make money. I think the Robin Hooders would love it. The downside, of course, is that we don't accept US citizens. So that's a big drawback. But just because of our licenses in place, but we do accept most other economies. In terms of the weaknesses, you asked, what challenges we face as a company. Look, it's a complex space, right? And ultimately, all financial trading platforms are competing for the same trader wallets. And as this conversation showed, there's a lot of nuances between the different types of option markets, different risk profiles attract different trader types. So for the digital contract to get out there, um, that's of course that's taken now almost 3 years into our journey. We believe this will be another journey for 3 to 5 years before it really becomes commonplace. So I think it's just adoption. We're moving the right direction, but we would love to see more market share. Here's the thing: is once you actually try the product, you're like, yeah, why don't I just trade digital contracts on a Tesla, on Apple, or Euro US dollar? Why do I actually need to go to another broker deposit and own these assets and wait, 2 weeks, 2 weeks, 10 weeks, 15 weeks to make the same amount? Granted, our risk reward profile is different on Spectre. It's more towards a short term retail trader, the day trader. But I think, yeah, in answer to your question, those are the challenges basically. There's a lot of competition in financial trading. So we need to find a way to get through that.
Yes, it's such an interesting one because of the nuances of that financial conversation, because these tools are so interesting. I try to people ask about leverage trading in our group conversations, and I tell them it's like firing a gun. Like you kind of want to go mess with it with really small amounts of money so you can see what it feels like, and you can kind of understand. Because if you go
Yeah.
play with like 100x leverage, you're most of the time you're going to lose. You're going to, because
Yeah.
it's just going to disappear. You've got less than you've got a percent of movement in either direction on a volatile asset.
Oh
Like
my
it's
God.
going to move 100%. It's going to move a percent. You know that. So it's just,
Yeah.
did you get it right and within a very short time frame? So I feel like highly leveraged futures are not too dissimilar to options. When people ask me like, oh, should I be playing with this stuff? I say, yeah, just with very small amounts so that you can understand
100%.
what this tool represents, because it can represent, like for me, options futures represent a type of insurance for my portfolio, where I'm like, okay, look, I've got we're at a pretty like split moment decision here. Am I gonna insure my account by going short here potentially, or am I already out of the asset completely and then looking to go even further into that position without actually having to go short, because I don't
Right.
want to own the underlying asset of going short, because I think that would be silly. I would rather own like a short time frame, highly leveraged. It's more like insurance. Like I'm probably going to lose the money, but if I don't, anyways, I see
Yeah.
the nuance of that conversation is so difficult, and one worth having, because a lot of the times, because people don't know how this works, they go in, they maybe make the mistake of putting a bunch of money in, thinking that's going to be like, oh, I'm just going to win back how much I've lost here, which is like
Yeah.
the worst
Yeah. No,
mentality.
definitely.
It's important for people,
Definitely.
yeah, to be aware. So, what are give a shout us out with some final things here. I'll I didn't get a chance to play around too much with the website. I apologize about that. I should have done a
Worries.
little bit more, but I think
No worries.
the nuance of the conversation of just options in general is an important one. Um,
Absolutely.
Tell us a little bit about um the like how, I guess, some of the greatest, like the most exciting things that you've had happen in the last 3 years in terms of development, and then we'll kind of, oh yeah, we'll finish near that.
Look, I would say for us, as boring as this sounds, we were a startup 3 years ago, 2.5. We still are a startup. If you look at our market valuation, etc. But for us, to hit break even every month is a milestone as a company. Our cost base is not small, so the fact that we're covering that from two sources of income, one of the significant ones, of course, is Spectre itself, the volumes. We get paid on volumes. I think that's been a big milestone. Now, I know a lot of people saying this will say, well, that's actually pretty boring, because you'd expect financial brokers to be breaking even. Surprisingly enough, most companies that list on the stock markets today, are loss making, right? They're hemorrhaging cash, and they're just getting more money in through the door to hopefully hit break even and profitability someday. Tesla being a great example of a company headed to a market cap of over $500 billion. It has started to see some quarterly profits, but obviously, they are far off from the high level of profits they would need to be, or they probably want to be as a company. So I think that was a big milestone for us. I think another milestone for us would be our token holders, who were instrumental to Spectre quite a few years ago. We have paid back now over $1.5 million United States dollars to token holders, right? And that's based on actual business volumes. That's based on actual investment income. So that isn't just, for example, us paying token holders in our own tokens, right? Without referencing certain projects, there is a bit of a APY, yield hype thing going on in DeFi at the moment, where certain companies just pay out 50% APY a year. Now, anyone who actually knows a bit about finance and trading and business will tell you that's completely unsustainable unless there's actually a business engine driving or justifying that, right? Otherwise, you're just printing inflation. So our token has, we've done that. We obviously have a long way to go, but we have gotten to that stage, and we've done this in two bear markets. Obviously, the global pandemic, which decimated many businesses, and then, of course, the crypto bear market in 2018. I would say those are kind of milestones. In terms of the actual platform itself, Tio, we know each other, I think, now almost for 3 years, off and on. But one thing for the token holders that know me, for people that know me, I rarely talk about our book. You won't ever see me pushing our book in terms of all the great things we have done. Our platform is a decent platform for traders that want to make a higher level of risk-adjusted return. It has its risks. It caters to a specific type of trader. I wouldn't say there's something so mind-blowing that we have done that kind of gets us into Forbes or something like that, right? I think we are still many years away from that. And so, yeah, that's realistically, that's what I could literally say about our business. The good thing is that if you go to key financial trading forums and you Google Spectre, you will see largely positive reviews, largely. And that's difficult for a financial broker because people hate financial brokers, because most people lose money at financial brokers, right? So that's something we're proud of, right? If you go to Forex Peace Army, you look at our reviews, they're broadly positive. The most important thing is all traders get paid, right? There's never been a single trader that has deposited money on the platform, centralized, made money, and had those winnings canceled, their money taken and them banned. That's never happened, right? So that's it. It's an honest, ethical broker, but it's somewhat, I wouldn't say it's more exciting or less exciting than other brokers, especially now that you brought up leverage. We hate leverage at Spectre. That's the beauty. Our digital contracts are delevered contracts. There's no margin. You can make 80%, you can make 60, 30%, you can make 400%, but we don't actually take margin from you, and we don't have margin calls. That's not even possible. So I think those are a few exciting things. But yeah, look, I look at some things happening with some crypto platforms, and these levels of leverage are crazy. They scare me. Leverage scares the shit out of me. You obviously are very learned in trading. I can tell by the way you're managing your downside risk. Look, we use on the investing side, which is the Hatchwork side of things, for managing the firm-wide assets, we use put options, out of the money put options as well, to hedge our downside risk. We don't write them, we actually take them out. We also sometimes take covered calls, right? Covered calls where we buy the underlying. That's an entire other discussion I would love to have with you someday. But funnily enough, that bit of our business has very little to do with the actual Spectre.ai, which is a very simplified way of trading. the markets. But that's it.
Well, fantastic. I think it's we're still so early in this. We haven't even seen the beginning of where some of this stuff can go. There's a lot of room for growth, and I think it's important to have conversations around what's possible, because we're still so early on. And it's such a fastly evolving sector. Okay,
Fascinating.
it's been a great to chat with you. I'm glad we got to go over some of that, because I know options and binary options. It just sounds like a complex idea. When you break it down, I think it makes it a lot more digestible.
Thank you, Tijo.
It's good to see that you guys are still up rolling and being successful and humble. That's an important part of the process, I think. If you guys can find Spectre.ai, we all have the links for the Twitter, all their discussions down below. I really like having these conversations, because I'm just on full direct, like, try to learn as much as I can mode right now, because there's so much going on. Is there any last ideas you'd like to leave us with before we sign off for the day?
No, if anything, I would like to sign up to your group, try out the TGO Bear trading thing. I got an email, by the way, from you. I think it was last week or 2 weeks ago. So I was very interested to see that. And obviously, after speaking to you, I can tell you have officially become Gordon Gekko, or professional trader. And it's exciting to talk shop with someone really understands the space well. So congratulations on that. From our side, there's nothing more to say. I would say that, look, if you are not a US citizen, if you are a financial trader, more retail trader, obviously, go ahead and create an account on the Spectre platform. Don't deposit any money, just trade it as long as you like on demo. Get comfortable with it, and our team will help you out. And if you want to become an affiliate, we also have a very rich affiliate program. We also offer a white label program, but that may not be of interest to traders specifically. It's more interest to people that have large communities, where they can run their own version of Spectre, right? Branded completely. We take care of all the risk management and all of that. So we also offer that as well. It's built on our API, our Rails.
And that was actually one of the thoughts I had was, do you think that this type of idea will be acquired by, because I think that where you're going here, the coding of this stuff is still, we're so early on in it. People haven't recognized the importance and the value of the understanding of all these automated market makers, and where these, because it's going into decentralized leverage options, futures. This is all going decentralized eventually, so I think, anyways, it's very interesting to hear you guys have already a white label product. I think that it's just going to grow so quickly. It's good to stay on top of. Kay, thank you for it's been a great chat. Check out the Arcane Bear. We'll get you a month's membership in there. It'll be fun.
I'll do.
I look forward to chatting again. And for the rest of the Bear family, give us a thumbs up if you like this content. Leave your thoughts, your questions, your comments down below. Remember to follow Spectre on Twitter and check out their links. You can go play with the demo account. I think that's a great way to kind of feel how it works, and important to kind of understand what options are. Just understand what time velocity or volatility means effectively. I think it's a good way to learn. And yeah, we'll see you guys again in the next episode. Thank you for all who stick around to the end of these shows, and we'll see you guys again on the next one.
Thank you, everyone. Thank you, Tio. Have a good one.
Ciao, brother. Thank you.